Hi everybody, thank you for joining us today for our presentation on VAT Reverse Charge from Moore Thompson. I'm joined today by one of our partners, Heather Bright. She's going to go through the compliance side, and then the plan is for me to touch on some of the software side.
Welcome everybody, Heather Bright here. Just a quick introduction to the VAT Reverse Charge. The Construction Industry Scheme, CIS, VAT Reverse Charge, applies to supplies of construction services and materials from the 1st of March 2021. This measure is being introduced because of VAT fraud in construction sector labour supply chains. Despite several attempts to introduce the change in the past, HMRC have delayed this implementation until now. HMRC consider that the CIS reverse charge will affect around 150,000 businesses. So, what is changing? The new CIS VAT reverse charge applies when all of the following are met. There is a supply of VAT of construction services and materials. The supply is made of the standard 20% or reduced 5% rate of VAT. The supply is made between a UK VAT registered supplier and a UK VAT registered customer. Both supplier and customer are registered for CIS. The customer intends to make an ongoing supply of construction service to another party. And finally, the supplier and customer are not connected. The change will not apply to zero-rated supplies or if the customer is based outside the UK. Who is affected? You will see from the slide an example of supplies within the CIS regime that will be affected by the new reverse charge, including internal cleaning of buildings and structures and things like painting or decorating the inside, external surfaces of any buildings or structure. However, there are supplies which fall outside the CIS regime but may look like they're within, and these will not be caught by the new reverse charge. As you will see on the screen now, examples include things like making and installing, repairing artworks, or installing seating, blinds and shutters in a development. What is zero rated? As previously noted, only standard 20% and reduced 5% VAT supplies will be affected by the new regime. Zero rated supplies, such as those noted on the slide, will not be caught as there is no VAT to account for. How will the system work? Under the new rules, VAT registered subcontractors who provide a service and any related goods to a VAT registered contractor who is CIS registered no longer need to account for the VAT. Instead, it is the contractor who will account for the VAT as an output tax, as if they made the supply to themselves. Let's work through an example. John the roofer, who is VAT registered, supplies the materials and roofs to a new office building for contractor Bob, who is also VAT registered, who in turn supplies its construction services to a developer, also VAT registered, who is working for the end user. Let us say that John's supplies to Bob are all standard rated. How does this work under the current system? John the roofer would, under the old VAT system, invoice contractor Bob £120,000, comprising of £100,000 bill for materials, labour and works, plus £20,000 in VAT at 20%. However, under the new CIS reverse charge mechanism, John invoices only £100,000. His invoice states that the CIS reverse charge applies and that the applicable rate of VAT is 20%. Contractor Bob pays John the net £100,000 fee. He then includes this within his VAT return and accounts for output and input VAT, including the £20,000 on the supply of John's services. John does not account for output VAT in his accounting system, as he has invoiced only his fee of £100,000. As a consequence of the reverse charge procedure, John charges and receives £20,000 less than under the old system, where he would have charged £100,000 plus VAT. However, he does not have to account to HMRC for any output tax on the transaction. John includes the value of the sale in box 6 of his VAT return. He does not add VAT to box 1 as he has not received any output VAT. The charge may well impact John's cash flow, as under the old rules, if contractor Bob was a prompt payer, he could hope that he could use the £20,000 in VAT to purchase his materials. He could then purchase his materials and offset the input tax paid against his output tax liability. On the reverse, contractor Bob has a cash flow advantage. He does not have to pay John £20,000, and then at the end of its VAT quarter, he cannot reclaim £20,000 as it is accounting for the reverse charge, and the output VAT offsets the input VAT. As contractor Bob is supplying CIS services, he must also consider the reverse charge and whether his client, the developer, is involved in the onward supply of CIS services. In this case, this may be difficult to determine as the developer is working on behalf of the end user, who is an investor, and the reverse charge does not apply. In this example, it may be the developer's responsibility to notify this fact down the supply chain. A further point to note is in relation to staffing and agency supplied workers. Such employment businesses who supply staff and who are responsible for paying the temporary workers they supply are not subject to this new CIS reverse charge. The end user. The CIS reverse charge does not apply to taxable supplies made to the following customers: a non-VAT registered business, a non-business customer, if the end user is the CIS registered person at the end of the supply chain who does not make onward supplies of the building and construction services, or intermediary suppliers who are connected. What is an intermediary supplier? Intermediary suppliers are end users or intermediaries connected with end users, e.g. a landlord and a tenant. To be connected or linked to an end user, intermediary suppliers must either share a relevant interest in the same land where the construction works are taking place, or be part of the same corporate group or undertaking as defined by the Companies Act. For example, the following are deemed connected in relation to relevant interests in land: a landlord, leaseor, and licensor, or on the other side, tenants, lessees, and licensees. For reference, a relevant interest in land does not include any temporary rights to occupy land to carry out building and construction services. For example, a property owning group may buy construction services through one member of the group and recharge those services to other group companies, their tenants, or both. All the members of the property owning group and their tenants would be end users. The reverse charge should not apply. In respect of the end user, it is their responsibility to confirm its status down the line as the end user. And it is recommended that end users sign a statement for each applicable contract to confirm this. Suggested wording for these statements includes the following: we are an end user for the purposes of Section 55A of the VAT Act 1994 reverse charge for building and construction services. Please issue us with a normal VAT invoice with VAT charged at the appropriate rate. We will not account for VAT via the reverse charge. For businesses that often deal with end users, the practical way of dealing with the question of end user status is for the business to include a statement in their terms and conditions to say they will assume that their customer is an end user unless the customer says they are not. This places a responsibility on the customer to respond if this is not the case. Other suppliers of services. We've already noted suppliers of CIS services that will be caught by the new regime in an earlier slide. However, certain excluded services can also be included, such as if there is reverse charge element in a supply, for example, a supply of just windows, not within CIS, but supply and fit of those windows is within CIS. If there has already been a reverse charge service between two parties on a construction site, and if both parties agree, any subsequent construction supplies on that site between the same parties can be treated as reverse charge services. If there is doubt whether a type of work falls within the definition of a specified service, as long as the recipient is VAT registered and the payments are subject to CIS, the reverse charge should apply. Where the contractor is asked to consider all construction contracts with a subcontractor, if they can see that reverse charge applies to more than 5% of contracts, either by volume or value, with that subcontractor, then the reverse charge may be applied to all the contracts. So what are the points to consider now? You will need to make changes to your invoicing and accounting procedures to take the reverse charge into account. But this may differ depending on whether you are contractor or subcontractor. You should also discuss the cash flow implications on your business of moving to the new regime, as there may be ways to mitigate the impact. The reverse charge will apply to all jobs completed on or after the 1st of March 2021, but it may also apply to work that was commenced before this date but completed afterwards. Determining when the switch to the new VAT regime takes place depends on the tax point, i.e. the date of issue of the VAT invoice or the receipt of the payment if earlier. Where the tax point is on or after the 1st of March 2021, then the reverse charge should be applied even for work commenced before this date. Otherwise, the existing VAT rules apply. I will now cover some of the points to clarify the issues that businesses may face. Tax point. What is the tax point? VAT is due when a VAT invoice is issued or payment is received, whichever is earlier. A single payment contract, the tax point is the point that the service is performed or completed. In relation to retention payments, the tax point is when payment is received or a VAT invoice has been issued for it. Once again, whichever is earlier. Treatment of existing contracts. The VAT treatment is determined for payments due on any supplies entered into your accounting system before the 1st of March 2021. The first VAT submission after the rules comes into place, but paid on or after the 1st of March 2021. For contracts starting after the 1st of March 2021, you should decide whether reverse charge applies from the start of the contract. The impact on VAT schemes. Cash accounting cannot be used with CIS reverse charge invoices. A business will need to review use of the flat rate scheme as likely to no longer be beneficial. If a business is likely to become a VAT repayable business, it will be beneficial for it to move to monthly VAT returns to aid cash flow. Would it be worth registering for VAT? It may be beneficial for some businesses to register for VAT to make applying the rules easier. VAT payments, where both the supplier and the recipient are VAT registered or should be VAT registered, the recipient is now liable to account for and pay the VAT to HMRC on behalf of the supplier, i.e. the supplier will not make a VAT payment on these CIS reverse charge supplies. Invoices. When supplying a service subject to the CIS reverse charge, suppliers must show all the information that is normally required on a VAT invoice, as well as a note on the invoice must make clear that the CIS reverse charge applies and that the customer is required to account for the VAT. No VAT is charged on the invoice, and it should state how much VAT is due under the reverse charge, or the rate of VAT if the VAT amount cannot be shown, but that VAT should not be included on the amount charged to the customer. And an example of this using the software package Xero follows later in this presentation. VAT penalties. Some businesses are going to have a certain amount of teething problems in getting to grips with the reverse charge mechanism. HMRC understand that implementing the reverse charge may cause some difficulties and will apply a light touch in dealing with any errors made in the first 6 months of the new legislation, as long as you're trying to comply with the new legislation and have acted in good faith. Any errors need to be corrected as soon as possible, however, as the longer undeclared or overcharged sums remain outstanding, the more difficult it may be to correct or recover them. HMRC officers may assess for errors during the light touch period, but HMRC have confirmed penalties will only be considered if you are deliberately taking advantage of the measure by not accounting for it correctly. The next step. To help determine how you're likely to be affected, you should ask yourself questions to see whether the new rules apply and how they may affect you to make sure you are properly prepared. We've included some examples on the screen now for your consideration. Take the time to go over these and consider your response so you can put the right measures in place. I will now hand over to Dan to go through the mechanics of implementing the scheme in your accounting software.
Thank you, Heather. I think that was some really interesting points. What we want to do now is look at it from a practical side and how it affects businesses on a day-to-day level. So whether you use a manual desktop or cloud software to maintain your records, you will have to make some changes to comply with new legislations, as discussed by Heather. You may need to make changes in your current software to enable it to address domestic reverse charge correctly. Today, we are using Xero as an example software, and we'll guide you through the changes that are required, along with the results that you will see from the changes. What you may find is, dependent on the software that you're on, different changes may need to be done. Once you've logged into Xero, select accounting from the top menu. This will bring down an additional menu. From here, you can select advanced. This will then load up the next page. Here, highlighted, you can see tax rates. Select that next. And from here, there's a blue button which says add domestic reverse charge tax rates. By clicking this, Xero will then tell you what the additional rates will be available. You can then add these by selecting the green button. These are now been added and are available tax options when creating purchases and sales. So how does that impact on a day-to-day basis when introducing new sales invoices or purchase invoices? Well, on the screen is an example of a sales invoice. Our clients that use Xero will recognize this screen straight away. What you will see now is the VAT options have been added, and we can use these when adding either sales invoices and or purchase invoices. For this example, we will raise a new sales invoice on Xero and presume that domestic reverse charge needs to be applied. As you can see, we enter the contact, date of invoice, due date, as we have in the past. We also enter the description of work we have carried out, quantity of work, net cost. And then when selecting the VAT rate, we now select domestic reverse charge at 20%. Our clients have a variety of methods of sending invoices to customers, ranging from printing and physically giving the invoice to the client through to emailing direct from their accountancy software. With Xero, the invoice being sent in whichever method is preferred will include the required sentence on the invoice. Show the amount due as per the new requirements and the relevant VAT rate for the customer to apply. Purchases will work very similar to sales. The supplier will issue you an invoice clearly stating that domestic reverse charge has been applied. And when entering this on Xero, you will follow the same procedure as in the past, but this time selecting the domestic reverse charge at 20% VAT on expenses. Xero will then allocate the correct amounts to the correct boxes on the VAT return. For demonstration purposes, I've issued an £8,000 purchase invoice with 20% dealt with via domestic reverse charge. As you can see on this example, the VAT element of £1,600 has been allocated to both box 1 and box 4, netting off to Xero. The net cost has also been included in box 7. Similar procedures will need to be followed on other softwares, but it is specific to the software provider, and unfortunately, we cannot show every variation. However, MT Cloud is happy to assist you and or make sure you have everything in place if you would like additional support. So to recap, if you are currently using a manual system, for example, a cash book, or using Excel for accounting and Word for creating invoices, you will need to make sure your invoices clearly state if domestic reverse charge has been applied. You will also need to allocate the correct amounts to the VAT boxes when compiling your VAT return each month or quarter. If you are on an accountancy software, ensure it is completely up to date or complete the necessary points so that domestic reverse charge tax rates are available. If this is a manual procedure, ensure you have both 5% and 20% as options on both sales and purchases. At Moore Thompson, we are always on hand to assist you. So if you do require any help or need any advice, please do not hesitate to contact us. We have also found that domestic reverse charge is another opportunity for clients to analyze their current internal setup. Computerized systems offer the luxury of working things out on your behalf. Domestic reverse charge is just another example of the many rules and procedures clients are expected to accommodate in their workings. And as a manual process, this could become an opportunity for mistakes. Cloud software offers you the ability to accommodate the business requirements while offering a number of benefits too. If you feel you'd like more information on this or how it would benefit your business, please contact myself or your regular partner / manager. Please use us. We are your accountants, and we are always on hand to help you with all of the compliance elements that are coming through from HMRC. Thank you for your time. I hope you found this helpful, and we will keep you posted as and when things change or develop.